And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is November the 11th. It's Veterans Day. Make sure you thank and honor the veterans that protect our liberties every day. You see Dan later on. Make sure you tell him thanks. Dan's a Marine veteran and very proud of that, and as he should be. Today, well, my name is John. As always, thanks for trusting me with your time. It's always about context, risk management, and patience here. There are no major releases today. It is Veterans Day. Markets are going to be somewhat freewheeling today as stock markets are open, but bond markets are closed. Federal Reserve Bank is closed. Private banks can choose to be open, or they can choose to have limited hours. There may be some limited participation today. Maybe not. As far as everything else is concerned, the U.S. dollar finally took out that 52-week high, traded to a 16-month high as inflation continues to rage, putting pressure to raise interest rates. Had the 10-year and the other treasuries dipping to the downside yesterday. U.S. stocks are set to open higher in recovery of yesterday's losses. The strong dollar is also putting some pressure on commodities prices, including oil, continuing lower. OPEC reported their forecasts today. Earlier, I haven't had the opportunity to read that information, but it doesn't seem to be helping price that much. As usual, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel so you can get notified when we do go live. Interesting. Looking at the VIX this morning, it's down 5%. Guess where? 1776. That's the spirit. The dollar index up a little, at 95.04 at new highs. The 10-year yield closed yesterday up 10 basis points, 1.55%. There won't be any changes in that today as the bond markets are closed. So, as always, got to say good morning to everybody. What a great session yesterday with Dr. Menaker. We'll have that up on our YouTube channel shortly. It's always such an honor to have him with us, and he's always got such good ideas, such good information, and there's such good sessions. The next time he's with us, everybody is welcome to come, and we talk about a couple of subjects, topics, and then we open it up to questions. So you can have the good doctor, a clinical psychologist, also a successful trader, somebody who works with hedge funds and large traders about trading psychology. It was a really good session. We've had 2 good sessions for group coaching this week, Monday and Wednesday. Thanks for all of those who came to those, and hopefully you found those useful as well. Good morning, George. First in the room, you win the prize today, George. Janus, Subconscious. Good morning, Harry, Drew, Jorg, George, Alfred, my brother Rick, love you. Charles, Robert Kennedy, hooah! Yes, honor the veterans. Brody, good morning. Shaw, good morning. Isaac. Ken Powell enjoying the opening range rules and guidelines. We'll review those today, but it's been a good week for those. They can be streaky, and here's why. A lot of traders focus on the opening range for early opportunities. the more traders that focus on it, the less likely it is to succeed. Sometimes the market will come around and take out the other side of that opening range just to clean out those stops, and then the real move will begin. So as you see it happening more and more, the likelihood of more traders jumping in on it and ruining it is increases. After it doesn't play out for a while, the short time frame traders will abandon it, and then it will be more prevalent to offer opportunities. So we'll review those rules today, probably when we see the crude oil open up. You got that 1 minute on the chart, so we'll see how that plays. Certainly was a great opportunity for crude traders yesterday to trade that opening range trade, taking that short as soon as the opening range broke to the downside. But we'll take a look at that, Ken, and I'm glad you're finding it useful. Zerain, good morning. Jerry, Aaron, dead letter opener, good morning. Felix, punctuality is close to godliness. I try to be as close to 7:45 as possible. Clem, good morning. David, Vince, good morning. Kevin Driscoll, good morning. Chris, good morning. Thanks for joining us yesterday, Chris. Vince, Ryan, Nemo, thank you for joining us yesterday as well. Volume is decent in the ES, so maybe we won't see a much of a drop in participation today due to the holiday. Stephen, Trading Research, good to see you. Peter, always good to see you. Tanya, good morning. Hey, Tanya, how you doing? It's good to see you. David, yes, thank you, Hogue. The therapy session was great. I'm glad that you were there and that you were able to get some questions answered, and always a pleasure to talk to the doctor. Charles, Andre, and Jeff, good morning to everyone. So what are we looking at this morning? Well, we're going to see if we can't find some context. The E-mini S&P and the Nasdaq, I could not think of anything to say about the Nasdaq that I didn't say about the E-mini S&P. It's the same story. Yeah, Ryan, you are going to be able to see it on YouTube shortly. I'll try and let everybody know when it is posted here on the forecast, and we look forward to providing that information. Anything that helps, that's why we are here. What else? Don't forget, honor those veterans. Let's see what we're looking at here in these charts this morning. Let me get things all set up here. And let's have a look-see. Okay, I think we've got things all set. I'm going to make sure you can hear me and everything. If there's any problems, I'm sure you will let me know. All right. So daily and crude. Balance. Kind of a wide area of balance. We're looking at 85 to 79, $6 area of balance. So there has been some volatility in this, which is usually welcome. It remains, though, we are probably in short time frame control. Consider that we are in rollover. Next Tuesday into Wednesday, we'll be switching to January 2022. I can't believe I'm saying 2022, but yes, that is where we are moving to next week. So keep in mind that that's going to keep our longer time frame traders more interested in getting a cheap rollover than any continuation or active directional trade in the market. Of course, they will be forced if they are. It's kind of like a sleeping bear. You poke the sleeping bear, all of a sudden you've got a monster on your hands. And that's kind of the way it is during rollover. And the way the situation is in crude oil right now, there may be a high probability of that. So we're going to keep an eye on things. Yeah, Nemo, you're not kidding. Time goes faster the older we get. Boy, no truer words have never been spoken. You think you've got all the time in the world, and then, whoop. You really want to make time slow down, though, Nemo. Put on a position. That slows time for me. So the stronger dollar, of course, weakening the position here, the price weakness. We lost 4,600 in open interest yesterday. The volume was okay, but not tremendous. It wasn't like a breakout day. More of a let's just get out, let's do rollover, let's take care of things. Let's take care of our rollovers, and we'll figure out the direction next week. The 30-minute chart. Overnight, we're kind of looking at mixed overnight inventory. When we look at settlement here, it's 81.34. We held above it most of the night. Looked higher, failed, looked lower. I'm going to say if we're anything, we're a little bit short now, and already trying to reconcile that position. So it depends on whether we open with a gap, if gap rules. Nuance number one for me today is if we open with that gap, and if we close the gap relatively early and find acceptance in yesterday's value area. If we reject it, there's plenty of actual repair below the market. We see this big move here with two distinct high volume nodes. And then we've got yesterday where we've got a high volume node here and a high volume node here. So there's repair on both sides of price right now. I'm going to try and stay really patient, unless, of course, the market leaves the opening range at one extreme or another, especially if there's somewhat of a gap. If we open outside a range, it's a little bit of a sign that we may be out of balance, and an earlier execution might be in the cards. We'll try and come back to the crude oil when the market opens. Let's jump into the S&Ps in right now. So the momentum to the upside has fallen, as we were kind of expecting. We had some pretty good volume on this pullback, but that's what the S&Ps and the equities do, is they bring in volume when the market starts to fall apart. Everybody tries to jump in. We didn't bring in any new open interest yesterday. We lost open interest. So it still acts like we are seeing long liquidation. Instead of new business coming in thinking the market's going to be moving lower, we've just got some profit taking over the past couple of sessions. Now, this morning, we got an inside extended trading hour range. The market kind of trying to recover the losses from yesterday. Remember, again, it is a semi-holiday. There may be a little bit less participation. Taking a look at the 30-minute chart. Okay, so we've got some overnight longs. Those overnight longs are basically right in the middle of value. I'm going to be trying to stay patient today. There is tremendous potential for repair. We've got our high volume node up here, which is the point of control. Another high volume node down here near the low of value, near the settlement price. It's almost a coin flip to say which one is going to get reached first. If we do reach one, it offers opportunity. If we get up to the high volume node here and we can't continue above it, the rotation might bring us down to this high volume node down here. So point of control here is the upper high volume node. I'm going to call it 46.73. The low volume node here is approximately value low or settlement. Settlement is 46.42. In the middle here, there's very little change to the perception of value, and we may find better trade locations as the day goes on. Back to the crude oil. Looks like we are not opening with a gap. Looks like we are opening with a gap. Here's that 1 minute chart. So as soon as the as soon as the first minute is finished, it'll show us the range for the first minute. That's the opening range that I choose to use. Other folks use 30 seconds. Other people look at 5-minute opening ranges. I find that the 1-minute opening range tends to be useful for me. Okay, we've got a high just put in. We've got a low. We've got about 15 seconds to watch and see which side of this breaks out. If you remember yesterday, it broke out to the downside, and that ended up being the absolute dead high of the session. Sometimes it just works that way. So there's our opening range. While we're sitting here watching to see what happens, the opening range was is something from the pit. All the brokers in the pit had orders that were due fills right on the open. If it wasn't a very busy day and there weren't a lot of orders, sometimes the opening range would be, just 30 seconds long and a couple of ticks wide. If there was a lot of business to do, the opening range would take longer and we have a wider price range. It was pulled by the brokers, by the exchange, to see what the range should be. So if you had orders that were due filled, you needed your price in the opening range. We see now that the opening range has been left at the high of the session. If this means that longer, stronger sellers are in control, like yesterday, we may see this market continue to move lower. The high of the opening range is always a number that I note. 81.19. 81.19 is the high of the opening range. We take that out, opening range may no longer be valid, except for the fact that sometimes the market will come up, take out the stops that we know are just above the opening range because so many people are looking at this, and then it might turn and go that direction. So looking back at the 30-minute chart here, actually, let's look at the TPO chart because it's a little more visual if we can see if we've actually got a gap by one tick. A 1 tick gap. So we'll see if anybody is able to profit today on that opening range trade in the crude oil. So there isn't anything that I can say about the S&Ps that I can't say about the Nasdaq. All it says on my sheets is see S&Ps. Good volume on the pullback. Let's take a look. Good volume on the pullback, a little bit more. There was a loss of 200 contracts all day yesterday in the Nasdaq. It's not necessarily indicative of big direction or big traders getting in either direction. More of an event that is probably just some longs taking some profits, some longs up here taking some losses probably. But, again, we've got an inside extended trading hour range. Same picture here. We've got settlement, which it looks like I failed to put on here, 15,980.50. 15,980.50. So right about here. Let's put it on. I want to make sure that I've got all the information that I need. 980.50. Close enough for rock and roll. Where are we? We've got some overnight longs, but we're right in the middle of value. If we unravel some of those overnight longs, it might give us opportunity near value low, back down near settlement. Overnight low looks like an opportunity for us. And again, we may be falling into an area of repair where, possibly down here is a high volume node here. Which one are we going to hit first? The short time frame structure for both the S&P and the Nasdaq is lower. We're putting in lower lows and lower highs. Could be that we're creating a bull flag So we'll be watching off these highs, off a trend line about like that, to see if we can maintain resistance at the highs here. Gold is next. Wow, what a big move yesterday, man. That was something to enjoy. Opening range was the dead ass low. No, actually, it wasn't. There was a number that came out. The knee jerk lower came back into range and then just popped. Okay. Strength in this market, good volume. Open interest, we added 25,000 yesterday. That's new contracts in an upward momentum. Good volume and increasing open interest in a market that is moving higher means that the auction is healthy. It is a healthy auction. If we continue to push higher and we start losing volume and open interest, that may indicate a potential change. But I think we've got a pretty substantial market state change right here. Okay. Weaknesses, it's a $100 move up in a very short period of time. We may see at some point that vicious, nasty pullback, but it doesn't change market state for quite a while. The next swing high, 1910. So we can go another $40 higher, up to 1910 before we hit this swing high, and then this swing high is next. This is an old weekly kickoff level way up here. We'll have to see if we have the opportunity to see that. I know some longs in gold and silver that would really appreciate that. Okay. Take a look at the 30. So here's our move off weekly kickoff high. We know that the volume open interest were really beneficial for continuation to the upside. We've got overnight longs. Settlements down here at 1848.30. We've accumulated longs overnight. We had a little bit of a pullback here before the open. Seems like the market just is taking that in stride. We did not open with a gap. We opened somewhat in value, out of value, spanning value. I'll be watching to see if the overnight inventory doesn't get a decent pullback. I think that's going to really mean that the market is stronger is strong. We know that the market is strong right now. But I think it may mean that the market is even stronger than we think. It's going to be hard to find decent levels for us today. It's always hard to buy higher, but sometimes it's just the right thing to do. Okay, the euro. Boy, that strength in the euro yesterday really knocked the strength in the dollar yesterday really knocked the euro for a loop, right to weekly kickoff low. Strong dollar, weak euro. We added 12,000 in open interest yesterday. Let's go to the daily. They added 12,000 in open interest yesterday on decent volume, not tremendous. We're currently wrestling with weekly kickoff low. That breakout below short time frame balance, basically last week's low, pretty decent. Again, that additional open interest indicates new selling coming into that. We tested the weekly kickoff low. That's where we are right now. Looking at the 30-minute chart, we've got settlement, which is right up here at 114.90 and a half ticks. Gap rules, yes, we did open with a gap, but we are still continuing to wrestle with weekly kickoff low. Very magnetic for the European session and so far in the U.S. session. Be careful with that because this might be somewhat pivotal, but the pivotal means we're short below, long above. If this market continues to rotate in and around that, it's going to chop us up. Be patient. See if we can find an indication of a direction, and then wait for the market to come back to that level for your entry so you can limit the risk on it. it's going to be a tricky day in the euro, I think, is mostly what I think I'm trying to say. So the 10-year, upside pressure on rates, downside pressure on price. Decent volume on the way down yesterday. We didn't add any open interest. We lost open interest. Why is that? Well, maybe some of these longs that we're holding here looking for a continuation to the upside, if they were the ones that got out. So not a big change in open interest on this big move on higher volume. Take a look at the 30-minute chart. Weekly kickoff low in play today. Almost similar to the euro, but the euro is kind of holding right on that important inflection level of weekly kickoff. And we're kind of holding down below it. I mean, this looks like a relatively target-rich environment. We had settlement right there. We have a previous point of control that we just checked yesterday. We have weekly kickoff high. We don't have a gap, but we're wrestling to stay below value from yesterday. With the bonds market closed today, I'm closed on the 10-year. There's not going to be any activity today. Probably not going to do much of anything. Whoops, sorry. Back to the nat gas. Okay, breakdown 2 days ago. Continuation, but some indecision in the profile yesterday. We added 1,600 in open interest yesterday, below an important inflection level, that level acting as resistance, at least for now. This price level, however, not necessarily supported by volume and open interest. This should be bringing in more volume. It did add open interest, but it is a little bit indecisive down here. Again, now we've got inside extended trading hour range, 30-minute chart. And almost looks like that is nat gas. So, the overnight range from yesterday, we're still inside of it. We've got settlement down here at $4.88. We did not open with a gap. We are working on finding out if we're going to accept value or reject value from yesterday. Again, I'm probably looking to let the first hour establish the initial balance before looking to get too involved here, because again, we're kind of bordering on short time frame balance or imbalance here. I want to see if we can find some sort of evidence of one or the other, which usually means it's going to cost me in trade location. So I want to go back. I don't know if I mentioned the high volume nodes here in the Nasdaq. Point of control up here, 16,181, and just about value area low looks like a pretty decent high volume node. One price just really sticking out there. So we're going to look at value area low as the high volume node for the downside, which is 16,004. Now, one question that was asked here that I see, I want to show you where I get my information for open interest, and it's on the daily calendar. I'm going to put this link into the chat here and send that through so you can bookmark that. This is the daily bulletin. So let's say for crude oil, I just click on that. Now I've got crude oil. This is the preliminary number. The final number won't come out until approximately 9:30. But here is all the information about this product, settlement price in the December, the net change from yesterday. When it comes to open interest and volume, look at how deep this market is, all the way for about 4 years out. So when I'm collecting information on volume and open interest, I choose to check the total volume, total open interest. Okay, so then you can just kind of go back to this page and then go to the equities. Here we have December S&Ps, 46.42 even. Total volume, total open interest is the information I collect. Why? We're in rollover right now in crude oil. Look at the loss in December crude yesterday, 42,000. I would be thinking, oh my gosh, everybody's leaving crude. We only really lost 4,600 over all of them. Okay. All right. Let me. Okay. This time I remembered to turn off the other mic so we won't have the doubling here. Let's see what we've got as far as comments are concerned. Sviatoslav, it means there's selling potential in the December contract, but buying potential in the January, February, March contracts of next year. Anybody that is long December that wants to continue to hold those positions is going to sell December, but buy a future month. Anybody that's short the November contract is going to be buying the November contract and selling a future month. So rollover doesn't tend to create directional activity at all because we're really just moving positions further down the road. It's a great question. Got you the high volume nodes, I believe, Charles. Ken, really low volume on the opening CL range. Let's see where it is now. Yep, opening range did not hold. Now sometimes that means there is a move in the opposite direction. Boy, that opening range really fell when we took out the high of it. Remember that. I know you guys can't see the chart I'm looking at right now, and Ken, you may be right. Just the low volume on that break from the opening range may have been enough to tell us that it doesn't have the guns, doesn't have the selling. Rick, I don't know what you're saying about below the moving averages on the charts. Dan Trader, my pleasure. Dan, I hope you got your information there on open interest data. Check the CME website, absolutely. Yeah, I would love somebody to code that up. It seems half the time I forget to collect the information the night before. Play a mean bass. We should get a band together. Dan, my pleasure. Oh, good. I'm glad. Trading research, you're enjoying the earlier time. Yeah, it gives us a little bit more time to dig deeper into the charts and to take a look at relax a little bit. Number one, and a little bit more look at some of the questions and comments. Well, you can add open interest to the quote board on Tradeovate on TS Trader, but it only shows you the front month. And don't think that you're going to be getting open interest in real time during the day. It takes the exchange extra time to come up with the real open interest every day. any platform that claims to be able to give you open interest on the fly, it's a lie. How do they know if a sell one order comes in on a platform that it's a new position, liquidation of an old position, or transfer of risk to another participant? They can't. They don't know that. But all right, enough of my pontificating. Let's take our deep breath and get ready. Humble, grateful, and creative. Thanks to all who came with and checked out the extra stuff this week with group coaching and market therapy. The doctor will be here one more time this year, I hope. He's a very busy man, and we're lucky to have him. Let's get out there and profit today. Is there going to be the great participation? Maybe, maybe not. I wish I could tell you for sure, but nobody can. So get out there, have a great trading day, and we will see you. I'll see you tomorrow morning. Tomorrow is Friday, I think. Yeah, Friday's after Thursday, so tomorrow's Friday. Make sure you salute Dan today on the market recap at 3 o'clock, and have a great trading day. I'm going to run down to the pit right now. I'll see you there. Have a good one.